Well, welcome to Property and Paper Live. This is Dawn Rickaby, your host. You can always find me over at notequeen.com. If you haven't already, go sign up, be on my email list, subscribe, whether you're finding me on YouTube or the podcast or whatever. I would love to have you engage. And thank you once again just for tuning in. Now, I've got a young man on here. Last weekend, I was in Scottsdale, Arizona. Because in all the things that I've done, I quit my nursing job in 2004, and I decided I was going to be an entrepreneur after years of sort of chasing real estate, but mainly it was the note business that I just fell in love with. I just got super geeky with that little financial calculator, and when I could learn to run those numbers, and really, I only know 5 buttons, but I'm really not a whiz. Like you want some sort of engineer type whiz and that can run you all the different numbers and knows what all those buttons do. That's not me. But I'll tell you that just knowing 5 buttons on the financial calculator, I was able to build a business. So I just want people not to be afraid of the financial calculator. It will set you free once you can figure out a few things on there. Quit my nursing job. I put on every hat. I go, well, since notes are secured by real estate, I guess I better learn a little about real estate. The only thing I knew about real estate is I had bought my first house. The thing that opened my eyes about that first commercial deal was that they would not take cash. They would not have taken cash for their building because that they had planned for years and years and years. They'd paid it off free and clear even before they paid off their house. They paid off their commercial building because they wanted to carry paper. It was their main retirement, right? So they said, no, honey, even if you had all the money, we are not going to take it. The most we are going to take is $50,000. Okay, so anyway, it worked out that I could buy that commercial building with owner financing. And that's when I learned very intimately that some people will not take cash because they understand that they can get an easy, quick sale at their asking price. They can defer capital gains. They can have nice income for retirement at better. I think they were charging me 7.5%, and a bank account or the best money fund or CD they could have found at that time was half that at 3.75. So they were making double, what they could get in any other passive vehicle. And they knew that it was going to be a great inheritance for their kids. Quick, easy sale, defer capital gains, great income for retirement, and liquidity, meaning if they ever had to sell the note or their heirs and beneficiaries, you can always sell that note for cash. People who own investment properties, especially tired landlords, they're the best. They're a great subject for this or possibility. And in fact, if they know what they're doing, they won't take all cash. Now, if you're buying with owner financing, the kind of terms that you want are completely different than if you are buying the note that someone else has created, right? The terms with you as the buyer that are attractive for you are not what makes a note have the highest present value. It doesn't mean it doesn't give them double what they would be making, but it just means that if they decide they want to sell that note pretty early on within the first 5 years, that means their discount will be a little bit higher. So those notes are for holding, for keeping, right? So, but if I'm the seller, I do owner financing, which I do. I've done more owner financing selling on terms than I have selling for cash because I love being the bank and having that income for retirement. But the way I set the note up when I'm creating the note and are very, very different than when I'm buying. So just to let you know, if you need the best of both worlds, you need someone like me who's been in the note business to kind of come in and reverse engineer the deal so that the seller can sell maybe a partial, meaning 3, 5, 7 years worth of their payments for almost no discount, but still have all this juicy retirement income coming into them. After being a real estate agent, they were doing the wholesaling. I didn't even know it at the time. I just didn't even, they were buying low and selling high. And, between 2000 and 2006, 5, 6, you didn't have to be a genius to make just hundreds of thousands of dollars, right? And then the crash came, and then I was my own real estate broker, and we did some hard money lending. But I was always asking them, let's quit offering for cash, because I talked to seller after seller after seller who they built up this real estate portfolio free and clear, maybe 5 properties, maybe a dozen, and it was their retirement income, and they didn't want to sell for cash. But what they did want, defer capital gains, income for retirement, leave a great inheritance. And a lot of them, that's where I was able to say, this is where the note business comes in. Someone who owns a piece of property, if they offer terms to you, Peter, or anyone else on this call, if they offer you terms, if they carry paper for you, if they give you seller financing, if they give you owner financing, all the same, means the same thing. That means they're trading a piece of property. Said, I don't want to own the property anymore, but I want to own the paper. And paper in the business is referring to promissory notes and deeds of trust and mortgages. Okay, so they don't want the property, they want the paper. And most sellers will net much more each month than they would as a landlord, right? Because they don't have to pay property taxes, they don't have to pay insurance, they don't have to repair the property anymore. Some of my clients who have hired me when they're selling, on terms to their tenants or to some other buyer, it's literally been a double. Let's say they were netting $1,500 a month from a rental. They are netting, let's say, $2,800, $2,900 a month from being the bank on the property.
Refinancing and buying this note, or the terms of the agreement are that this is a 30-year note or 15-year note or whatnot, and you cannot earlier buy it off. Like if you would want to, for example, buy a property, improve it a little bit on your own, right, and raise the value, and refinancing to pull money out, right, then it would automatically pay off the note, correct? So
correct. Are you speaking of when you're the borrower, when you're buying, Peter?
Well, yeah. I mean, if let's say I convince somebody to do a seller finance, right?
Right.
But and we write a note, which would be, let's say, 15 or 20 or 30-year note, right?
Right.
But in 2 years or something, I'm like, you know what? I actually want to refinance this property or buy it off or. Is there any reason why you would want to do that, or how do you do it? Do you just stack properties and with owner financing and just let them, finance it with the original owners?
If you get good owner carry terms, I would say it's very rare that you're ever going to want to pay that off, because it's going to be better than bank financing. And if you know what you're doing, there's like little tricks in the note business are you can walk the mortgage. Let's say even if you wanted to sell it, but you wanted to keep that nice 3, 4, 5% interest rate you might have gotten from the seller, you can secure it by a different property. That's called substitution of collateral. We're getting in the weeds, but I'm just opening your mind that there's a possibility that you could keep that great private financing. And I would say, never
still access the equity.
Never give that up. Who cares about the equity? I would have a really hard time giving up 3, 4, 5% private money, because there's so many things you can do with it. And then if you position yourself correctly, you can get a first right of refusal to buy your own note at a discount. Try doing that with a bank. I was meeting with some of the guys this last weekend, Peter. We're like, oh, well, I can just get bank loans for all my rentals. And I go, like, good for you. Great. You've got good credit. You got money for down payments and things. But why would you get a bank loan if you could get owner financing? And he just never thought about it, because if you get owner financing, lots of times it's quicker, easier, and even cheaper than bank financing. And there's always that potential that you could buy your own note at a discount. There's a potential you could walk the mortgage. There are so many other profit potentials that are mind-blowing that I'm not going to say you're going to get them every day, but you don't need a ton of great owner finance deals and real estate transactions to really change your life. And Peter, you're going to be making a ton of money. You've been grinding, you're pushing, the hamster wheel's going. You can also add in a little bit of passive income. If you start building a little passive income every other month, you're adding $200 a month, maybe more passive income. Before too long, you'll look back and you'll have created a base salary for you and your guys, right? So that means even if you step off the grind, you still got your basic, your mortgage, your rent, your food covered on a passive basis. There's no reason why you guys can't be doing that and not even give up the wholesale fee up front.
Do you go after multifamily units more? I mean, is that the target, or single, or anything actually?
Well, my bread and butter is single family residences in the median house price or less, right? Because in any market, those are the kind of deals you're going to have a huge buyer pool. And then let's say I get great owner financing, but I want to take some money off the table, but I don't want to get rid of that private loan, like I was just telling you. Well, then I will wrap that. I'll sell the property, but I'll wrap the existing financing, meaning leave it in place. And then you put your own loan, you be owner financing on the other side. And when you're selling, so then someone gives you a big fat down payment and you get a monthly payment. This has to be serviced by a note servicer. You can't do this without a licensed note servicer. Very, very bad idea, but it's only a few bucks a month.
Okay.
Okay. And then you start creating passive income. So that's how I would do it. And that's been the biggest game changers for me. Not to get too far in the weeds, but does that help?
Yeah, it was perfect.
Yeah.
Thank you very much. And if you one last question, that's a quick one. Like, what's your targeted area? Where
Okay, yeah. For me personally, I'm marketing where I live because I have so many creative strategies that work when the properties are in my community. We'll say within 30 miles or so,
Okay.
right? But it doesn't mean I won't do a deal somewhere else, or I'll help you put a deal together. And then maybe I buy the note that's out of there. And if I end up buying the note, you say, Peter says, Don, come help me do this deal, or I'm assigning this thing. Well, let me know about the note, because you can assign the property, as you know, for a wholesale fee. You can also assign the note. It doesn't mean I can always guarantee I can buy it or a piece of it, right? But if I can, why not make 2 wholesale fees instead of 1? There's no reason why you can't make 2 deals out of 1 or more. And if you're willing to stay long-term, and it's in a book that I just finished writing, that wholesalers extra 10,000 a month. I just finished writing that. It's only $17. And it's showing in there a story where my first deal that I did, it could have been, this is before I knew anything. I was stumbling through everything. I was scared. Anyway, this is back 2007. I could have made a $5,000 wholesale fee, even though I didn't even know how to do it. But instead I kept my foot in it. And within 10 years, I had made more than $50,000 on that same deal that I could have just made 5,000. So why not 10x your gains? No promises. This is for entertainment purposes only, just for disclosure for whoever's listening. But that was my first deal. And it's so iconic because I made profit centers in 5-6 different ways on that one little deal starting back in 2007. So I'm stepping and repeating. That's what I want. I'm doing some wholesale stuff. I'm going after properties, only maybe 10% of which I'll ever get owner financing, but those are the ones I'm going to keep for me. But what I'm after is owner financing. I'm ravenous for it. And I also want the notes. If other people do owner financing, I want the notes created out of that. And if I'm brought in ahead of time, as a consultant, or you sign up with my coaching or something like that, there's a lot of ways that you can learn to make a lot more, not to distract you because you spent 3-4 months, grinding and busting. But if you when you're ready for a little new twist, you guys will surprise yourselves of what's possible.
Yeah. We want to start holding properties starting next year. Either, through bear method or I mean, when you wholesale, you come across a whole bunch of different really good deals,
One deal, what you're doing? Like, seriously, my best, most iconic deal that worked out this way. I've had others that are less, wow. But in one case, just the right clause in the note made me an extra $105,000 that I didn't expect. Okay, it's not that you can guarantee, but when you can create options and potentials for profit down the road, one deal can more than pay for your education. And it just depends on how long you want to take to get there. You know, you can do one-off, you can read books, you can listen to tons of free videos, you know, or you can just say, hey, I'm going to go for the top. I'm going to learn it quick, implement quick, and boom, you know, you've definitely more than paid for the mentorship. So it's really exciting. Super glad that you came on. Well, thank you so much. It's so fun to talk to, especially new people. It's just really gets me all fired up, you know, because I get all excited all over again, you know, from when I discovered it and go, oh my goodness. It's where I get all geeky and passionate about this little niche part of the market. So,
hey Don, this is Sri. How are you?
Sri, great to hear you. What's going on, my friend?
So I have a deal.
Yeah.
The property is in Warren, Michigan. I foreclosed from the second position. The UPB was like 16,000. So the payoff is like 30,000 because they haven't paid in a while. But it's not a moot point at this point of time. The reason being I already foreclosed on it. So, and I got the property back. But there is a first lien. First lien is about 54,000.
Is it delinquent too, or is it performing?
Oh, it's delinquent. Let me get there. So what happened is they were current on the first in 2023, and we were negotiating, and I agreed to their terms. I mean, the borrower, whatever they want to pay, because I just wanted a performing note. So what happened is, then they backed out. They eventually stopped paying. So I foreclosed on them. So since the property is in Michigan, there is a 6 months redemption period, and the credit report does not report who is the first.
Wow.
Right. Mm-hmm. So I mean, it's ridiculous because for redemption at 6 months, but you can pretty much complete foreclosure in 2.5 months in Michigan. So the first went ahead and foreclosed on me. I have until March of 2024 to redeem it. So here's the kicker. So I got property management or preservation company to go in, change the locks,
right,
take the pictures inside and all of that.
Mm-hmm.
The first is owed about 54,000. It probably needs about, easily $30,000 of work based on pictures. Obviously, I was not there in person.
Right. Mm-hmm.
Right. That is my situation right now. What would you do in this situation?
Pull my hair out even faster than it's already falling out. You bought a second lien that was non-performing, or at least you got it performing and then they backed out something, but it was
no. It was non-performing. I'm talking about the first lien they were paying when I bought it.
Okay, they were paying the first lien, but the second was non-performing from day one that you got involved.
Yes.
Okay, and it was about 30,000, and you right with arrears and everything.
Yes, I bought it for 7,200.
So basically, you got it for 20 cents on the dollar or less, right? Oh, yeah, 20 cents, 25 cents in the dollar.
Yeah.
Right. Okay. So you bought that second note, you foreclosed. That is so bizarre. I cannot believe that you cannot find out who the first lien is. I mean, how can you not find out? It's in public record. It's got to be.
No. So what happens is I know who the first is, but the servicer is not listed in the public records. Now I know who it is. But before they did the foreclosure, I did not.
Okay.
Right, because it was some company called BRAZZO, Brazo Residential Funding. It looks like a sister company of Goldman Sachs. That's all I know about them. I mean, I have an opportunity if I want to, because I did talk to the attorney, because in public records, they list the attorney who foreclosed it. They said, sure, you can buy the property by paying $54,000 and accrued interest since, July 7, 2024. But depending on the photos and stuff, the fair market value might be 125, 130, but you're not going to get that, as is for sure. You need at least 30,000 plus, closing costs, what have you.
I'm just looking at, 54,000. How much do you think the payoff is? What, 58,000 maybe for the first?
No, I don't think so, because, it has been delinquent only since.
So what do you think your payoff is? I just want it for kicks and giggles.
I mean, let's just say 57.
I was only off 1,000 from what you would say. So.
Yeah, I mean, it could be lower, but, I also don't know. So I'm saying, Let's go with that.
Okay, so basically, if you paid them off, if you could,
Right.
so that's 57, you're in it for 7,200. Did you have to do back taxes, forced place and all that or what?
No, I just had to do foreclosure, right? So I had a $4,500 foreclosure cost.
Okay, so now you're in it for 68, almost 69,000 divided by, I mean, if I was like a wholesaler, right, I'd be 125 after repair value. Is that after repair value?
You're talking about 125? Yeah.
Is that as is or after repair value?
After repair value.
Okay, so 125 times 0.75 is 93 minus a nice fat wholesale fee. I mean, it's pretty tight there. I mean, even
It
just
is.
a wholesaler's maybe only going to pay you 73.
Yeah. Yeah. I mean, what I was thinking is,
So where's the rehab budget?
what was that?
Yeah,
Where's
what's
the rehab budget?
About
Yeah,
30
you
grand.
were-
30 grand.
Yeah,
So all the
that's-
systems work. You basically have to change the carpet, paint, new kitchen, new bathroom, but the plumbing, HVAC, everything works because I got it inspected.
Yeah, but if 90, if 75% is 93 minus 30 grand, that's 63, then it puts you already
then
upside down.
minus the
6
wholesale
grand.
fee. Yeah, you're right. I didn't even take out the rehab there. So you're in it more than any investor would like. So you have to go retail basically. But then who's going to keep this property safe through the winter until March?
I can have I have property preservation company that can actually go winterize the property and, lock it up.
Mm-hmm.
It's already locked. I changed the locks and stuff, but
Yeah.
so I was just looking from a deal structure perspective, like, I not wholesaler, but seller finance it to a rehabber or a landlord that likes to buy these properties.
Mm-hmm.
Probably they get it at a lower basis than what it is. And I was
Mhm.
trying to see if there's a way to structure it. And the numbers I'm not able to make the numbers work, but it is what it is.
What would it rent for? Do you know?
Probably 1,500, 1,400. Let's say 1,400.
So forget the wholesaler fee. You're your own wholesaler. If someone can come in and I wonder if the 1% rule, if someone would like that, if they're in at 140 and they got to pay 30,000 to fix it up, then that means, and then minus something else. I mean, maybe someone, would pay 90 for it, 90 to 100 with the right terms, but aren't you just pretty much hamstrung? I mean, if you were to sell it right now, would they let you do it? You would just know that they could unwind it from you. So who's going to go in their right mind and put 30 grand into it?
No, I mean,
Yeah.
my plan is, so I was making sure I was not throwing good money over bad money. What I
Right.
mean by that is, if some rehabber weren't or a landlord who does fix and rent were to come in, I would pay off the first, and I would
Mhm.
move it into the first position,
Right.
and they would probably put about 10,000 down, fix up the property, right? Rest of it I would finance it for 15 years, 20 years, 30 years.
Yeah.
That's what I was thinking.
And there's no way it's not rentable right now, right?
I mean, borrowers were living there until July 7th.
But is it rentable? That doesn't even mean anything. You and I both,
Yeah,
you can walk into a place and you're like, what? People lived in here?
it's not that bad. I mean, I can send the pictures. It's not that bad. It's dated for sure, but it's not like everything's broken all over. There are holes in the walls. None of that. All the mechanicals work.
I wonder if you get an investor who's a buy and hold landlord type, if they would just put someone in there through the winter and not rehab it till you're past the point and that you can convert into, you know what I mean?
Yeah.
I guess, aren't land contracts real popular over there?
Yeah, they are, but I didn't have much luck with land contracts. I generally, I'm against it
Yeah,
as a principle. It's too much of a hassle than benefit.
right.
So I would just go ahead and do a deed of trust and a note.
It's just a weird one because even a landlord type, why would they even risk 10 grand? I mean, the only thing, I had one deal once and this is do not do this at home kind of a thing, but basically there was just no way to perfect title,
Mhm.
but it didn't stop me from renting it out anyway.
Mhm.
So until something happens, quiet title action or something, and the lender wakes up, it's a really weird one and I could never get through. But I took the risk I just took the risk and we fixed it up, and we've been going 4 years now renting a property that we can't perfect title on, but we're cash flowing it just fine. So it just
Okay.
depends on your gut feeling about it. If you can get it insured, can you insure it?
Yeah.
Okay.
I already have insurance on it the day I foreclosed.
So to me, when I can insure a place, sometimes I just go ahead and do things, not with other people's money, only with my own, my
Right,
own
right.
401ks and stuff. But there's a lot of people who will take a problem and just, if they can cash flow it, they'll take the risk. They'll take the spin of it. Like, what's worse? Putting in a teeny bit of money and the risk of throwing someone in there and then they have to get kicked out, or having it vacant this whole time for another
Right.
6 months. Which
Right.
is worse of a risk? What are you leaning toward doing? I'm curious.
If I can get at least 65 to 70, then I would do it. If not, I would let it go because the numbers, they don't make sense. If I can't get 70, I'm going to be in a hole. So I will let it go. I'll write up the
Let
loss.
it go as in sell it, or just walk
No,
away?
let the first take it. One of the things that I was thinking about is now that I have the pictures, just like how you submit a short sale package, get a package together and actually send it to the first lien holder. Tell them that, hey, property is not really worth. You can actually go through the pain of winterizing the property and going through, until February, and then actually sending it. You might as well sell it to me for 25 grand. I'll take it right now. So you're done with this. So I'm just going to try with the pictures.
Hey,
and
you know
stuff.
what? That doesn't hurt. I mean, and you can do better even paying 90 cents on the dollar, right? You'll do
Yeah.
all right.
Yeah.
Because they're going to be behind you. How long? 2 months to foreclose? 2.5 months?
They already foreclosed on August 11th. So that is the reason I was saying they have 6 months before they foreclose. I mean, the redemption period ends.
Oh, the redemption period. Oh, I thought you said you foreclosed.
First I foreclosed, then they foreclosed on me because
Oh,
they're
right.
in first position.
Okay, I missed that piece. I
Yep.
didn't think that they had started their foreclosure. So, well, I don't know if they can sell it to someone for 60 grand. I'm not sure why they would take 50 cents on the dollar from you, but hey, it doesn't hurt. It
Yeah.
doesn't hurt because their reserve requirements, from what I understand in the whisperings that I listen to, a lot of banks are probably going to be failing. Depending on where they're at, they just would rather, well, they either got to hide their losses and they don't want to mark to market, right? Or they need the money in their reserves. I guess you can't tell, right? So I think,
I mean, the bank's failing part, based on a CRE conference that I attended recently, that's more so applicable to banks with have a lot of commercial assets. I mean, they have lent out to commercial assets, not so much on the residential.
Gotcha.
They're a little bit hurt, but the commercial side is where they're hurting really bad because.
Oh yeah.
So what happened is they have lent out for 3 or 4 years. I mean, 3 or 4%. And generally how commercial are, right? You have a 5 or 6 year term and then the rate resets. And if they're trying to settle the notes, they cannot because, current buyers will expect what is the market rate right now or what is trading at, right? So the lower, I mean, even something which was originated in July of last year, they were not able to sell it in November. It was that bad because the rate spiked really fast. So they're still stuck in that position. So once the 5 or 6 year rate adjustment date comes through, what they're doing is, property was cash flowing before based on the earlier rate, but it's not cash flowing right now. So they let them pay the current payment, whatever it was before. But what happens is that note becomes really worthless or really low value because they can't sell it to, recapitalize again. That's the situation they're in.
Yeah. I don't deal in these as much as you do, but someone brought me a note and they're like, this was a private person who it was a commercial building. And I think they were in it at something like 50 or $60 million. They were begging for a $10 million offer to buy their note and they couldn't get.
Really? These are still available?
No, it was kind of a daisy chain thing. I didn't have direct. Okay. So I'm like, yeah, I don't.
Never mind.
Yeah. But I was shocked like he's going, oh, well, we'll give this to you for 20. It's my friend, blah, 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 blah. Yeah, sure. I don't know. Maybe it was.
Right.
But then I go, yeah, it's just not my low hanging fruit. I could dig around and, but you waste your time daisy chaining stuff. I really,
Yeah, yeah. I mean, if somebody comes to me to wholesaling a note, I said, I'll pay your fees. You don't have to worry about it. We can write whatever agreement you want. But I'm talking to the seller. If I'm not talking to the
Yep.
seller before I buy, it's not
Yep.
happening. So we might as well
Yep.
end it right now.
Yeah, I totally get you. So I said no, and then he came back and he said, actually, they'll really take 10 million. So like every 30 minutes, the number dropped,
Wow.
Okay, think about that. Someone who originated a 50, $60 million note is
Right.
begging for 20 cents on the dollar and
Yeah.
willing to go less.
Right. Where was this property located?
Oh, I think it was Chicago area or something like
Oh, okay.
that.
Yeah. Chicago hospitality, based on, what I'm hearing, Chicago hospitality industry notes are the worst hit right now. Those are the most available distress notes.
Yeah. I'm just surprised all these, these big families, these families that have just hundreds of millions of dollars. It's like, it
Mhm.
just seems like they should be on a big shopping spree right now.
Oh, they are. They're picking and choosing.
Yeah. Are you selling up chain to these guys? I mean, or how often are you selling up chain to those big family?
I mean, what we used to do is, so even family offices have different business models, right? Some of them deal with the non-performing stuff. Some of them just want the performing, but they have specific criteria in the states. This kind of yield. They want more safety than higher yield. So they're okay with even 6-7% yield. But
Wow.
they want 18-month payment history.
Right.
The PLTV has to be less than 70% and that kind of stuff. So what we used to do is we used to package them as a bundle because it can be one C2C note. So once we get to 50, 100 notes of that kind, then we would sell it because we were getting a better pricing when we sell it at 6-7 yield to them. So that's what we used to do.
Wait. Was that a commercial paper or?
No. Residential. I mean, commercial, we are in the process of curing them. I mean, it's a lot more expensive than residential. I'm just learning that part. The foreclosure process, everything is expensive. We are going through the process. It's not seasoned yet. They would buy it, but I have to make it, package it really good. Yeah.
Interesting.
I mean, family offices that can buy NPL, they don't have to reach out to me. They have bigger pockets, so they can directly go to, the banks or hedge funds and get them.
Yeah, I think the one guy, what he was telling me is a lot of these big families are different than what you're describing. They don't want performing. They just want to go in like the vultures. They want deep discounts on non-performing big assets,
Yeah, I mean, you get all kinds, right? So some of them are into this business. They understand the business. They do it. One of the family members is actually involved in the business. I know somebody in Dallas who does that. I buy from them many times and we sold to them many times. Do you know, what is it called? The desk where you can work computer table?
Up desk?
So they have a patent for creating that desk. That one goes up and down.
Right.
You know what I'm talking about? So those are the family offices that we used to sell and buy a lot. They are buying a lot of commercial stuff right now, NPL. So they are in the trenches. One of the family members actually is involved in the day-to-day operations. Gotcha. He has a huge staff and stuff, but those guys are buying. So not every family is of the same kind.
Okay. Well, thank you for that. I don't know. You get what you pay for, Shri. I'm not sure I gave you any big ideas on your deal, but I always think it's so interesting you talking through that. But you're just thinking, for people listening, look, he could have won big buying at 20 cents on the dollar, or he's willing to walk away. So when you're playing, he's like, it might be cheaper for me to walk away from 7,200 and change, whatever. Well, foreclosure, $5,000, some carrying costs or whatever might be cheaper than taking this all the way through. Yep. But so interesting thinking on that. But I am curious to see if you will get a response from the first.
Yeah, I mean, they're talking to me, but what they're saying is I'm talking to the attorney that foreclosed, not the actual lender.
Yeah.
It'll come to the lender part. So what the attorney is saying, standard response, right? They don't have any authority because I know when my foreclosure attorneys, when the borrowers talk to them, they don't have any authority. So they get back to me and I have to make the decision, not the attorney. So the attorney is saying, oh, basically, if you want to buy it, it's 54,000 plus the interest due from that day and all of that stuff. I'm like, yeah, I will look at it. I don't think there's enough value there, but I'll get back to you.
But that's interesting because if they take it back, they're probably going to hire an REO agent, and the agent's going to have to come out of pocket for all that rehab.
Yep. At the end of the day, again, they will be ending up near 30, 40 because, there's much expensive than the vendors that I use, the process that I go through.
Right.
And they have to pay a salary to somebody in their office, more than one person. So
very interesting. Well, someday I hope one of the next calls, I want to know what happened, like what they said.
Yeah. And if someone is looking for a property in Missouri, I just foreclosed on a property. It's in Missouri.
Which part?
I think it's Newburgh something. I can send the information. I just got the property back this morning. I have one other foreclosure in Maryland. So if anyone is interested in buying any of those, I can provide seller financing.
So Missouri, if you're an investor buying in Missouri or Maryland.
Or Michigan.
Or Michigan. Do you have more deals than this one that you're talking about?
These three are readily available. I have 6 other where I was able to find investors and we locked up the deal already. So we're waiting for them to put the down payment and move forward.
So do you just out of curiosity, when you don't have someone you already know in that area, how are you finding your end buyers? Are you listing it? Are you going through the wholesale clubs, the investor clubs on Facebook?
Yeah, investor clubs. Mostly what I do is, I'm a member of a lot of Facebook groups where I have notes, and also I join the meetup groups locally. So I list them. And, during COVID, I actually spoke on several meetups, how to do seller financing and, how to buy note buying, all of that stuff. I was a guest speaker, so some kind of credibility, I guess, or at least in my mind. So when I list it over there, I do get good responses. So.
Yeah, well, that's great. That's fantastic. Well, I guess we will probably call it unless there's anything here. I'm getting ready.
I had a question, if I may.
Hey, Danny. Yeah.
Don, when you're carrying paper and you're developing your notes, do you do the language yourself? Or you have an attorney do it?
Yes and yes, because over the years I've seen attorneys drop the paperwork so often that I basically kept my own templates. This one for this state, this one for that state. If it's somewhere where I do a lot of business, then I already have the templates that have been attorney created. So then I can just draw up my own stuff. It's not rocket science. Otherwise, I just have someone.
And then you have a local collection company do the collection.
Yeah, I'm only recommending right now Madison Management. They're pretty much national.
Okay.
And they're actually they moved a few years ago. They moved to Reno, so they're right here local.
Oh, I thought they were in Sacramento. Okay.
They're in Reno, and also incidentally, they are speaking at the Reno Gingers meetup in Reno on the 3rd. Is it the 3rd or 2nd?
Right on Wednesday night. Yeah,
go to that one in November because they're going to be speaking there. Kevin and his wife Sadhana, who I've had on as a guest speaker, and also she did a fabulous job for that seller financing class I was putting together. It is the bomb. The work, the downloads, the questions, all that. It was very, very, very good information. So,
and what was that little nugget you had in that last note that you made another 130,000?
Yeah, it was a first right of refusal.
Okay.
So if she would have, it's just basically just like you can have on a property. You can have a first right of refusal to buy a property. You can have one to buy a note as well. So in that case, I didn't expect her to ever sell the note, and I told her she shouldn't, but she ended up having a very severe health issue a year after we made our deal, and she just wanted to liquidate. And I said, you shouldn't. I'm not going to stiff your kids. Don't worry. I'm not going to quit paying.
Well, that was a win-win there for both of you.
Yeah, but she wanted, and so basically because I had that option in there, it ended up making and or saving me, whichever way you want to look at it, $105,000.
Good.
So anyway, that's the power of owner financing from the front side, from the back side, from every which way. Owner financing is just
Yeah.
hugely amazing. And depending on what hat you're wearing, whether you're the buyer, seller, whatever, it just depends on how you're going to structure that deal. So
Sounds good. And are you doing the last ones? Have you gone just a fixed rate with rates maybe dropping down since the Federal Reserve might drop rates?
yeah, when I'm doing it, I just make it a flat fixed.
Flat,
Because
okay.
I'm trying to make it as compliant with federal regulations and safe harbor guidelines as possible. So
Is five a pretty good going right now?
it depends. Am
Okay.
I the seller? Am I the buyer? So
No, that's all right.
right. So, and it's whatever the numbers make sense for all parties. So,
You almost back into it then. Got it.
oh yeah, you got to
Yeah.
back into it. And yes, I'm happy to pay 5% if I'm the buyer. I don't pay more than 5%.
No.
Okay, but I do charge more than that typically, unless other things make me change my mind. Maybe I'm getting my price. Maybe
I
I'm
see.
getting something else. Maybe I'm getting a huge.
A Rickenbacker 2% margin.
Yeah. Right. So, well, anyway, just a pleasure to be on here with all you guys. And for those of you, I have to jump on another Zoom now for our land trust training. Anyway, you guys take care and go out there and create financial solutions, just one mom and pop to another.